Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up, Mike Baudendistel is going to give us a rail and intermodal update. But first, we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to this Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and today we're watching the tender volume index drop right below the value of last year for the first time. We are almost in a dead heat right now in terms of year-over-year volumes. Again, keep in mind that Easter did have an impact into the tender volume last year, so we were about to enter somewhat of a trough here. But again, the fact that we are now plummeting below that, or appear to be on our way to plummeting below that, it is a pretty significant moment. Watching this mountain climb up here over the last few weeks and then fall back down roughly to a similar level that we had last year. We do appear to be slightly over it right now, but that's probably a short-lived moment. We are in a dead heat with volumes year over year. So carriers out there should be seeing about the same level of activity year over year. May not feel like it in certain sectors, of course, but again, overall volumes are about dead even. We expect that number to continue to drop, however, through the week. So be careful out there. Tender rejections, however, higher than they were this time last year. Capacity, of course, was a lot more even, a lot more balanced. We were coming into a much more stable time of year. Much more stable period of existence for the freight market in general as we were coming off of that 2018 high. The market was definitely on its way to having its most stable levels of the year in April and May, as volumes did drop unseasonably low here over the next few weeks. But tender rejection rate sitting about 8.91% compared to 4.91%. So a lot of these carriers might be out of position right now. You have a lot of heavy inbound going into a lot of consumer markets. Not a lot of outbound, because think about it, a lot of those consumption-driven areas are going to be producing less because all of these areas are condensed with, or very dense population centers. A lot of those factories are not operating right now at full steam. So again, a lot of imbalance in networks happening right now as carriers are going all the way into an area where there's not a lot of production to get them back out. So they're struggling to get their trucks in the right position over time, as we see a lot more disruption in the freight market. Now again, these volumes dropping may have an initial impact on capacity really getting loose here in the near term, but over time, carriers are going to find themselves stalled out and sitting in more areas, so a lot more deadhead potentially happening here over the next few weeks into a month. Looking at, I wanted to pick up something here that's an interesting fact. So we're seeing volumes drop, and I've got our outbound tender market share heat map pulled up right here. Now, market share is based on volume, but it is not volume. What you can use this for is looking to see where places are falling more dramatically in a market where everybody's down. So significant drops in all these markets in terms of outbound tender volume, but these markets in green are not falling faster than these markets in red. The ones in red you really need to pay attention to if you are a carrier, because those are the markets you really need to watch out for on the tender market share, because they're dropping much faster than the rest of these. I've got Atlanta pulled up over here on the outbound tender volume index in green, and then you have the outbound tender market share in blue. Notice the market share is going up because everyone else is falling faster than Atlanta is. But their actual volumes are still declining. They're just not declining as fast as the rest of the freight market. So again, Atlanta's still one of the less bad areas to operate out of right now in terms of volume. Ontario, California, something that's been relatively subdued, actually a pretty good market right now in terms of being less bad. And you see a lot of green here, but I mean, markets like Salt Lake City, Grand Rapids, Michigan, San Antonio, all showing dramatic drops in terms of market share overall. Now, looking at the weighted rejection index, see where we're standing right now. If you notice, we've only got the highest value is a 1.1 on the weighted rejection index, very low number, meaning that there's just not a lot of things tightening week over week right now. So I kind of fell down the markets here and found the one with the highest market share value of Minneapolis, of 0.885% in terms of market share, decent sized market. And it is actually showing an increase in rejection rates as volumes decline. So again, Minneapolis is a little bit tighter than it was this time last week as volumes are falling off. So carriers, watch out on the spot market up there. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail and Intermodal update. I'm here with Mike Baudendistel. Mike, what do you have for us today?
So intermodal volume is down again this week. Not surprising. Those numbers from the AAR just came out, and intermodal volume was down 15.5% this week, versus a year ago. So a little bit worse than the previous week. It was down 14%. But you sort of see here how the trend has been the last couple of years. Remember 2018 in orange was an extraordinary year where everything was very strong on the demand side. 2019 last year was just a little bit more of a return to normal. Intermodal was down about 5%. And so far this year, intermodal is down about 8%, but we're sort of, like I said, 14, 15% the last couple of weeks. So, intermodal is trending lower. Intermodal, tend to think of, big retailers, consumer goods products being in, intermodal, but a lot of dry goods. There's also a lot of, auto parts actually in intermodal containers coming in from the ports of, Port of Vancouver, and then a lot that goes cross-border, U.S. and Mexico as well. So expect further declines there. This chart shows a breakdown between international intermodal and domestic intermodal, and sort of the takeaway here is that international intermodal, these are the intermodal that moves primarily in 40-foot containers. That's fallen off a lot more than domestic, and that's a result of fewer sailings, a lot of the blank sailings that have been canceled, and now seeing lower import volumes on both coasts. It's migrated now to the East Coast. Takes longer for that to happen with the longer sailing routes. Domestic has held up better, but that's down too. Domestic intermodal really did not benefit from the short-term surge that you saw with the trucking industry. Really, that's a result of the domestic intermodal being less time sensitive, and also doing much less with your refrigerated and groceries and those type of things that were so strong for short-haul trucking. Here we dig into one of the lanes that we talked about today in the Daily Watch. We talked about New York to Chicago. That's the most dense intermodal lane in the east. And a couple of interesting things here. Closer to you on the left, we have outbound tender volume index from Elizabeth, New Jersey, and you see that sort of leading the rest of the country. The rest of the country is in green. So New York has been hit harder than the rest of the country, at least so far, by the coronavirus. What's interesting is there's a lot less freight going out of New York because of the lower import volumes. There's also a lot less freight going into New York because people have left. So on balance, it's less of a head haul market. So sort of less activity overall, and also less of a head haul market. How that's translated so far into intermodal rates is here in blue. You see the intermodal rates in that Linden, New Jersey, call it Metro New York to Chicago lane. Still pretty low. We're showing it a little bit higher year over year, but really below the average. We're also seeing that in most of the dense intermodal lanes across the country, including those dense intermodal lanes in the west, like the LA to Chicago, LA to Memphis, those type of lanes.
Got you. And Mike, one of the things you mentioned earlier was showing how much there was a drop-off in intermodal volumes. But we saw that the recent one, of course, we can attribute a lot of that to the current pandemic, but we saw that it was even below year-ago levels and the previous 2-year levels, even before that ramp-up. So really kind of shows that there was this was a weak spot, or a weak volume, so to speak, before all this pandemic stuff really sparked up.
Yeah, I think that's right, and I think it's a couple of different things there. I mean, I think on the one hand, the consumer is getting a little bit more cautious, which a lot of what is in those containers is consumer type goods, and so that's been translating to lower volumes, and then just overall, there's just been less lower import volumes coming in through the ports. Once the manufacturing in China gets fully ramped back up, I think the next question becomes: is there going to be enough demand from the consumer to pull that freight through? I think there's a possibility that the manufacturing gets turned back on in China, and a lot of those consumer goods stay close to the ports and stay in warehouses, just because you won't have that consumer demand because there's been such a shock here with employment in the stock market, et cetera.
Got you. And Mike, Always scared to ask, but I always like to ask people around here, any idea on time frame of expectations? Surely second half of 2020 is looking a little bit more optimistic for many people, thinking that volumes are going to come back online, but any insights on your side?
Yeah, I think a lot of it depends on the consumer. I mean, I think some of the latest things that we saw, like today in the Wall Street Journal, they talked about how quarter or third of the people who were renters aren't going to haven't paid their rent in April. I mean, those type of things have big economic consequences. So I think it's going to be a situation where, okay, even if we get to the peak for the coronavirus next few days, I'm worried it's going to be a really long tail, or people go back to work and you have sort of a W shape or something like that. So I think it's going to be a weak year.
Awesome. Well, Mike, thank you for the insight. Amazing as always, and thank you so much for tuning in. That's going to do for this update, and that's also going to do for this edition of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite platforms, including Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.